Welcome back to the Daily Crypto Roundup, the show where we cut through the noise, make sense of the chaos, and bring you everything that's moving the market right now. Whether you've been here from the start or you've just found us today, hit that follow button, because the next few weeks could shape how the rest of this crypto cycle plays out. We've got some huge stories today, from a new push for US-UK crypto passporting that could change global regulation, to Bitcoin holding at 2-month highs, Bakkt's stock exploding 150%, and a major fraud case in the UK reminding everyone why transparency matters. Plus, a look at how India's regulators are tightening the screws, and why Bitcoin is once again being compared to gold as a safe haven. So, let's dive straight in. First, let's take a look at where the market stands right now. Bitcoin is trading around $123,410, up about 2.8% in the past 24 hours. Ethereum is sitting at $4,485, climbing 3.1%. Binance Coin is steady at $1,018, up just over 1%. Sol is pushing higher at $223, a 3.5% gain. XRP has moved up to $2.92, adding nearly 2%. Cardano is holding firm at 77 cents, up 1.5%. Dogecoin has lifted to 27 cents, climbing around 2.8%. Avalanche trades at $46.30, also up about 2%. Toncoin is sitting near $7.10, slightly green on the day. And finally, Polygon rounds out the top 10 at $1.16, climbing roughly 1.7%. In short, it's green almost across the board, and the market looks alive again after what felt like months of drifting sideways. The big headline today comes from the regulatory side, and it's one of those stories that could quietly reshape how global crypto firms operate. Adrian Harris, the outgoing head of the New York Department of Financial Services, has called for the United States and the United Kingdom to create a crypto passporting agreement. Now, if you're not familiar with that term, passporting means that if a company is licensed in one country, that license is recognized in another, allowing it to operate without needing to start from scratch. Harris says this could cut compliance duplication and create a shared standard for oversight. What's interesting here is that she's not just some commentator, she's the same official who helped design New York's BitLicense framework, one of the earliest and strictest crypto regimes in the world. For her to now advocate for flexibility tells you how much sentiment inside regulators has changed. Industry analysts are already weighing in. Dan Dolev from Mizuho Securities said, "A transatlantic passport would be the first real step toward harmonized digital asset regulation." Meanwhile, Oliver Lynch, CEO of Bittrex Global, told the Financial Times that the proposal could reignite London's role as a crypto hub, while giving US firms a path to operate globally without constant uncertainty. It's rare to see both sides of the Atlantic actually moving in the same direction, but this could be that moment. Imagine a Coinbase, Kraken, or Gemini getting automatic access to both markets under one rulebook. That's a seismic shift. And speaking of Coinbase and Kraken, this story couldn't come at a better time. Both companies are expanding again after years of legal wrestling with US regulators. Kraken is reportedly planning a return to its token staking business in certain jurisdictions. And Coinbase has just confirmed it will resume parts of its UK operations that had been on pause. The timing lines up perfectly with talk of a passporting regime. For years, exchanges have been playing regulatory hopscotch. Get licensed here, blocked there, wait 6 months somewhere else. A shared license system could finally streamline all of that. It's early days, but this one could end up being one of the biggest stories of the quarter. Now, from policy to price action, Bitcoin has been on a tear again, climbing to its highest level in 2 months and holding strong above 123,000. What's fueling it? ETFs inflows and growing conviction that crypto's correlation with traditional assets is breaking down. Over the last week, ETFs have seen net positive inflows every single day, reversing what had been a dry September. The bullish energy is back, and institutions are back too. Bakkt Holdings, a company you might remember as one of the early Wall Street-backed crypto infrastructure plays, saw its stock jump a staggering 150% in a week after it announced a restructuring and a renewed focus on custody and compliance technology. Traders see it as a sign that crypto infrastructure isn't dead. It's just evolving. Analysts at Fundstrat said in a note this week, the rally in Bakkt is symbolic of the broader shift. Institutions aren't scared anymore. They're positioning again. Even JP Morgan's crypto desk, which has been relatively cautious, noted that ETF demand and treasury buying have created a new floor of legitimacy. That's a big change in tone compared to the Gensler era of constant enforcement headlines. It's starting to feel like the conversation has moved from, should institutions touch this, to, how much should they allocate? Over in London, another huge story is unfolding, and this one is straight out of a financial thriller. Zhimin Qian, better known by her alias Yadi Zhang, has pleaded guilty in what prosecutors describe as one of the world's largest cryptocurrency frauds. Between 2014 and 2017, she allegedly stole billions from more than 128,000 people in China, funneled the proceeds through shell companies, and parked the money in Bitcoin. When police raided her London apartment, they seized 61,000 Bitcoin, worth more than $7 billion at today's prices. That's right, $7 billion. The case has been dragging through courts for years, but her guilty plea this week finally closes one of the most surreal chapters in crypto's history. Analysts are calling it a watershed for law enforcement. It shows that crypto's transparency, despite the myths of anonymity, is what makes this kind of prosecution possible. Blockchain analytics firms like Chainalysis have been working directly with agencies on cases like this, and they say we're just starting to see what's possible with on-chain tracing. For investors, it's a double-edged sword. Crypto is finally being policed properly, but it also means the Wild West days are officially over. It's a step toward legitimacy, and sometimes legitimacy comes wearing handcuffs. Meanwhile, back in India, regulators aren't slowing down either. After already targeting 25 offshore exchanges last week, India's Financial Intelligence Unit has now doubled down on anti-money laundering enforcement. The latest update is that several of those exchanges, including CoinX and BingX, have been formally served with compliance deadlines. If they don't register under local laws by the end of the month, their domains could be blocked nationwide. India's finance minister has defended the crackdown, saying that crypto cannot operate in a vacuum outside the law. For a country with one of the fastest-growing retail crypto markets in the world, this tension between innovation and control isn't going away anytime soon. But while enforcement is tightening, interest in Bitcoin and ETH among India's young investors hasn't cooled at all. Local data shows record downloads of domestic exchange apps in the past week, and Bitcoin trading pairs on Indian platforms like WazirX and CoinDCX are seeing their highest volumes since early 2022. It's the same pattern we've seen before. The harder regulators push, the more people seem to buy. And it's not just retail traders making moves. Corporate treasuries are quietly stacking Bitcoin again. Companies like Strive, Semler Scientific, and Metaplanet have all announced new Bitcoin purchases in recent days. These aren't small firms, but they're also not mega caps, which makes their actions even more symbolic. They're part of a new wave of mid-sized companies viewing Bitcoin as a hedge against inflation and currency debasement. This kind of slow, steady accumulation rarely makes headlines, but it's exactly what builds a base for the next major run. Now let's take a step back from the news cycle and talk about the bigger narrative forming behind all this. More and more investors are starting to view Bitcoin as digital gold again. The New York Post even ran a headline this week asking whether Bitcoin is now the safer haven compared to gold itself. With gold struggling to hold $2,000 an ounce and real yields staying high, investors are rotating to digital assets with fixed supply and global liquidity. Bitcoin's performance in 2025, up more than 70% year-to-date, dwarfs gold's 5% gain. It's not just speculation anymore, it's portfolio strategy. Former BlackRock strategist Edward Dowd said this week, Bitcoin is now behaving like a mature macro asset. It trades with conviction, it reacts to liquidity, and it's outpacing every traditional hedge. You can't ask for a clearer sign of how far sentiment has shifted in a decade. What was once a fringe bet is now being modeled in institutional risk systems. And speaking of risk, let's pause for a second and talk security. Because none of these headlines mean much if your crypto isn't safe. I always remind listeners that the best trade you can ever make is protecting what you already own. I use a Ledger hardware wallet for long-term storage because it takes your coins off exchange, off the internet, and into your control. Whether markets are pumping or crashing, your keys stay yours. There's a link in the description. Grab one if you haven't already, because every bull run eventually exposes who took shortcuts on security. All right, back to the markets. One under-the-radar mover this week has been Bakkt Holdings. Yes, the same Bakkt that launched with huge fanfare years ago, and then nearly faded into irrelevance. After announcing a restructuring and a shift toward institutional custody tech, the stock exploded 150% in a single week. That kind of move from a legacy crypto infrastructure firm is a major signal. It tells us that Wall Street's interest in digital assets infrastructure isn't dead, it's evolving. Analysts say that if Bakkt's model works, it could inspire similar rebounds for other legacy crypto plays like Silvergate's successors and even Galaxy Digital. It's another sign that the institutional side of the market is rebuilding quietly, while retail focuses on memes and price charts. And speaking of memes, let's talk Dogecoin for a moment. After months of quiet, Doge is finally showing signs of life again. Elon Musk's X platform is continuing to integrate small-scale payment features, and while Dogecoin isn't officially confirmed as a payment rail yet, speculation alone has helped lift it nearly 3% today. Doge is sitting just under 28 cents and trending across social media again. Every cycle it happens, people underestimate it, it wakes up, and then it runs far harder than logic would suggest. Retail still loves a good meme, and Doge remains the king of them all. As for Ethereum, the fundamentals are starting to align for something bigger. ETFs inflows have strengthened since early September, and analysts at Citi just raised their price target to 4,500, noting that its correlation to Nasdaq tech stocks is dropping, a sign it's being treated more as its own asset class. The big debate now is whether it can decouple from Bitcoin's shadow during this cycle, or whether we'll see another rotation where Bitcoin leads and alts follow. History says rotation is inevitable, but timing it is the tricky part. Across the rest of the altcoin market, Sol is still the star performer. Institutional interest in Sol's ecosystem continues to grow, and developers are shipping at record pace. Its trading volume this week is up almost 30% from last week, driven by heavy activity in DeFi and tokenized real-world assets. Cardano and Avalanche remain steady, but haven't shown the same momentum yet, while XRP continues to attract attention thanks to speculation around payment partnerships being revived after its partial legal win earlier this year. When you zoom out, the story today is simple. Momentum is back, regulation is shifting, and institutions are re-entering the picture. The panic and fatigue of the bear market feel distant now. Instead, the vibe is confidence mixed with cautious optimism. Everyone knows we're not out of the woods. Regulation, volatility, and macro shocks can still shake things up. But there's a sense that crypto's narrative is once again aligned with progress, not survival. So where does this all lead as we head into the middle of October? The next catalysts are already lining up. The US inflation print next week could jolt risk assets again. A softer number could send Bitcoin racing toward 130,000. On the regulatory front, all eyes will be on how Washington responds to the passporting proposal. If the Treasury or the SEC signals openness to cross-border harmonization, we could see a wave of optimism across exchanges and token projects that have been waiting for clarity. Meanwhile, in the UK, the conclusion of the Zhimin Qian case might push lawmakers to tighten anti-money laundering rules for digital assets, which could actually make it easier for banks to offer crypto-related services under stricter compliance. At the same time, the tech side of the market keeps evolving. Ethereum's Layer 2 networks are scaling fast, Solana's transaction throughput continues to impress, and new token standards like ERC-7640, designed for on-chain identity and proof of reserves, are gaining attention. This is the part of the cycle where fundamentals start to matter again. The tourists fade, and the builders take center stage. So there it is. The state of crypto today. Regulators shifting, courts convicting, institutions buying, and the charts finally waking up. It's messy, it's unpredictable, and it's never dull. But that's why we love it. If you enjoyed this episode, hit follow, share it with your crypto crew, and drop your thoughts below. Do you think the passporting idea could actually work? Will Bitcoin keep rising into the 130s? Or is a pullback overdue? Either way, we'll be here tomorrow breaking it all down again. Stay sharp, stay safe, protect your keys, and we will see you at the top.